Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are finding yourself on our channel for the first time today, don't forget to check out that subscribe button because we drop an update just like this one every single day at 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And that's exactly what we're going to be doing in this video. And we are going to be looking at the macro headwinds in this video that have essentially been caused by a readjusting and now a debate in regards to rate cuts that are coming this year, not just in the United States, in the UK, based on the higher inflationary print that we had today, and of course, Europe. So we are going to be looking at that. We have a lot of crypto things to get into. We're going to be looking at the fact that Bitcoin ETFs within the first 3 days, just checking I'm holding the right amount of fingers up there, has seen $10 billion worth of inflows. Now, this is huge, and we're going to be comparing this with other ETFs and the kind of inflows they saw at launch. And this shows a clear demand for Bitcoin. And actually, Gensler made a video yesterday where he was kind of trolling Bitcoin, saying, you know, it's kind of contradictory, the whole point of decentralization, when institutions are basically centralizing Bitcoin from a buying point of view. People could have already bought Bitcoin. Now they're doing it via institutions. He kind of trolled the space a little bit there, which is quite interesting. But we're not going to focus too much on that. We're going to be looking at the IRS $10,000 rules that they've not actually put in place, and they're kind of backtracking a little bit on. And then we're going to be going over to the charts. We're going to be looking a little bit at the Dixie, the stock market. We're going to be looking at the Bitcoin 4-year cycle theory, which dictates, if things are to be followed, that the bulk of the move comes after the halvening. So we've been very early in positioning, very right, and done well as a result of it. But we still have a lot of upside to come, and I want to share that with you. So as today, of course, is such an important day in regards to what's taking place in about 4 hours from when I'm recording this, which is the SEC versus Coinbase lawsuit. Let's start there. And let's start with the Meta lawman giving a quick update. So the SEC versus Coinbase update 2. I won't predict how Judge Failure will rule on Coinbase's motion to dismiss until after the hearing tomorrow. This was obviously the hearings today, so this was posted yesterday. But only one thing I can confidently predict: the judge will pose some tough questions to the SEC's lawyer. She already has. And I actually am expecting a really positive result for the altcoin market, which we think is going to outperform Bitcoin based on Bitcoin dominance and others' dominance, and Coinbase as a stock. So Coinbase is at a very interesting, or coming into a very interesting level, coming into some support after breaking out of that broader head and shoulders neckline. Our first head and shoulders target got hit perfectly, and it's sold off from there. We have shown this on multiple occasions just to kind of show it once more as I am talking about this. So to bring up the chart, you know, this is what we were looking at for Coinbase, and we're now looking at this sort of inverse head and shoulders pattern that we've had huge success for in regards to altcoins. So this was our head and shoulders from broader down this year, and we were speculating, just like we are now for altcoins, that, you know, this was our target. Look at where you ran into. Look at where you sold off. Coinbase dribbling down. But the interesting thing is there's actually another key level of significance, which was clearly resistance here that you're coming down to. And I think with what's taking place today, there's a very good chance that Coinbase bounces and the altcoins bounce, as they were mentioned in regards to the SEC's lawsuit. You're going to get more clarity on them. He's going to be getting asked questions like, well, if you're not okay with Coinbase holding crypto for people and being a custodian, why did you approve their company, knowing everything they did? And a big question for me that I think Gensler is going to be asked is, what's the issue here when you applauded and approved a Bitcoin spot ETF and Coinbase were the custodian for these ETFs? So it's going to be really interesting. Also, altcoins, we're waiting for a break of a lot of resistance across the board, whether that be an inverse head and shoulders, double bottom pattern, whether that be just bouncing off support. And that's likely going to come with momentum. So today could be the day that all that happens. We did cover that a lot in yesterday's video. So important to watch that. I think you can dial in to listen to the hearing. I'm not sure if it's streamed anywhere, but we'll keep you up to date on that as it progresses. Let's talk a little bit about the macro, and then we'll bring things back to the crypto space. Or actually, first of all, let's just talk about exchange traded fund inflows. And this is from Eric, obviously the senior analyst over at Bloomberg. Well, we're following. We always bring him up. We should be giving him a cut of these videos. So let me put into context how insane $10 billion in volume is in the first 3 days. There are 500 ETFs launched in 2023. Today, they did a combined total of 450 million in volume. So 500 ETFs versus the 11 or 12 Bitcoin ETFs. The best of one did $45 million, and many have had months to get going. So the IBIT alone is seeing more activity than the entire 2023 freshman class. So this is insane. This is a huge demand for Bitcoin via an ETF. And you've got to, we've stated this fact before. In the United States, 70% of wealth is with people 60 and over, the boomers. Okay, we are lucky enough, and if you're young enough, you are not just young enough, everyone is going to benefit greatly from the kind of unlocking of capital that's coming, that's been held in property, that's been held in all these things, with the great inflationary system that we've had. Ask your parents what they bought the house for, or your grandparents. I know stories of people buying houses for a couple of grand that are now worth millions. It's insane, and a lot of that is going to be unlocked. So this is really significant. He goes on to then say, note, half of those 500 new freshman class ETFs did less than $1 million in volume today. It is hard to get volume, harder than flows, even and definitely harder than assets, because volume has to form naturally in a marketplace, can't really be faked, and it gives an ETF staying power. So this is really interesting. This, of course, is monitoring the inflows, a lot of which in Grayscale. We know Grayscale, of course, was a reason I believe that on the first Friday after an ETF approval, we had the sell-off because, of course, the arbitrage trade that we even took in regards to the Grayscale discount window and the finalization of that. Let's talk a little bit now about market headwinds. So inflation has been progressively trending down. We're getting slightly higher than previous prints across the board in Europe first, then, of course, the United States, and now the United Kingdom. And the interesting thing with the United Kingdom, this was an article just from today, UK inflation rates surprise with a rise to 4%, led by, I'm not going to say this word, but you can see it here, and this, which are very heavy government-regulated industries. Remember, guys, the government do this stuff for your benefit, okay? They add taxes to try and prevent you guys from harming yourself, whilst Big Pharma comes and every single solution that a doctor will offer is to stick you on this or that and, go about your daily life. So governments are full of shit, absolutely. And they are not only the causes of inflation, certainly the 2020 inflation that was based on all the printing that took place via lockdowns that actually, the world's kind of gone back to normal now. Was it really necessary? And they say, okay, well, we need to up taxes and we need to do these things because we need to start paying things back. There is no correlation between higher tax and the deficit. In fact, the correlation there is opposite. I'm sorry, guys, I just have to say this sort of stuff. But we are running into a bit of a macro headwind. Markets getting ahead of themselves on rate cuts and risk being self-defeating. So towards the end of the year, everything was going crazy, and we were looking at like 8 rate cuts in the United States. The Fed's dot plot has about 3 of them on there. And we were actually looking at rates coming down. This is the March one, so I'll just show the January one, not to confuse anyone. January, 31st of January, they're going to leave rates where they are. That's a given in my opinion. Then they were speculating that rates were going to come down by 25 basis points. We're going to see the first rate cut in March. I have said many times, it's too premature. They're going to have learned from Volcker. They're going to have learned from the 1960s. They're not going to bring rates down. Inflation has come right down. It's still not at the 2%. If you want to use true inflation, you can, but true inflation tracks a way bigger basket. So it's almost like looking at 2 different things. I think that markets are constantly readjusting based on sort of macro forecasts. Now, I think rates are coming down. We're looking at some really interesting with the yields in the United Kingdom and States that suggest a macro thesis on things is right, and we understand the correlation between rates and markets. And actually, a sideways period for rates typically sees the markets go on and run into new all-time highs. So I'm happy for them to hold rates. I think it's just a bit of macro headwind. I think the dollar is gaining a little bit of strength. So if we take a look at the dollar, we ultimately, and I'm going to take it right out to a monthly chart before I present it, believe that the dollar is in a big range and it's going to find its way down to the lower band here. We need that dollar weakness to support the markets. There are a number of currencies that the dollar's against, like the ZAR and a number of other things that the dollar's doing good on. So we think the dollar is now in a broader downtrend. We think this is just a counter trend move. However, I am watching it because I wouldn't like to see it run the 104 mark. So I do need to see the dollar start rolling at some point rather soon. And we'll see what data brings that forward. But there is kind of a bit of a store box headwind in the macro space with readjusting. If you look at where, for example, the S&P is, it's consolidating around all-time highs. I think it pushes through all of this. I was actually looking at Amazon. Amazon, I could see going and nearly doubling to $263, which supports our overall thing. We're getting interesting stuff happening with the stocks. We were so right on stocks last year. This was Microsoft. Again, same thing with Coinbase. I can also show you the NASDAQ, for example, which was one that we got very right. You know, look at where you sold off, just like Coinbase. Subscribe to the channel, guys. You don't get this sort of technical analysis really anywhere. You know, there's maybe one person I can think of who's dead on, but generally, you know, technical analysis is a bit interesting on across broader channels. So lots going on. Of course, Bitcoin. This is our plan for Bitcoin. Inverse head and shoulders that we had earlier on. Projected target, consolidation around the target, small continuation pattern into what is now, we believe, a broader neckline that we're waiting to smash potentially on momentum. And we're kind of looking for this right shoulder to form. I think it's going to be a lot more shallow. Maybe it gets down to the high 30s. I see people calling for 30K sub again. After being wrong for the entirety of last year, the Bears, when are you going to pivot? When are you going to say, okay, we've been wrong, let's now assess the market and where it's at? Why? I don't know why people are doubling down. And one of the reasons people are doubling down is because they think that we're in a recession and they think that, you know, they've got all these fantasies about the market, whereas actually none of the data actually dictates that. So just a bit of a rant there, I guess. So we're waiting for this to play out. Altcoins are in a very interesting spot. You know, we'll look at Hedera, for example. We'll get that bad boy on log. Breaking out of our stage 1 base into support, we're expecting a big move here, just like we are looking at for potentially Coinbase. And many of your altcoins are actually waiting to take a neckline. And today could be the day based on what's happening with the SEC and Coinbase. I want to show you the Brave New Liquid Coin Index. This is the biggest chart of Bitcoin that we can find. It goes all the way back to 2010. And this is the 4-year cycle theory. So we've done many charts on this, actually. I'll try and find another one that this was something that we've stopped tracking. We should have continued to track it, where we looked at our kind of amber light thing. This is what I started on when I started out in YouTube all the way back in sort of going into 2020. You know, history is just repeating, basically, guys, perfectly. And if we go back to the BLX, is how you'll find it on TradingView, if you're not familiar. This is when the halving set to take place, around about April. And you can see typically the bulk of the move, the bulk of the bull run comes pre. So everything looks good. This also aligns with our broader macro context of how this year is going to play out. Going into 2025, we don't see a landing really until 2025. The last little thing for me, I guess, to talk about is the IRS rules about the £10,000 accounting. They're kind of backtracking on this a little bit. So the IRS steps back crypto tax rules, exempting transactions, TXS, for anybody that doesn't know what that means, over 10,000 from obligation. Interesting. So the US International Revenue Services didn't state when it intends to issue new regulations detailing how US businesses will need to report. So this isn't even in effect yet. And they're saying at this time, digital assets are not required to be included when determining whether cash received in a single transaction or 2 or more transactions meets the reporting. We don't even have clear regulation from the SEC or the CFTC on this stuff. So that makes sense. And again, today we might get a little bit more clarity on that. I don't expect a ruling, but I do expect some, again, like what the Meta lawman said, harsh questions to be asked to Gensler. I think they're going to come off rather bruised as a result of it. And actually, it's going to have broader ramifications for the altcoin markets and Coinbase itself. So that's all I've got for you in this video, guys. If you've enjoyed this content, a like is appreciated. So as a comment, don't forget to check out our evening videos that we drop around about 6:30 p.m. UK time. And we're going to start incorporating later on videos where it's just going to be me and the camera talking about interesting crypto stuff. Don't forget to become a patron. If you want to check out my Patreon, there's a link in the description. We just did a portfolio update on what we hold. We're also going to be introducing more smaller plays and all this kind of stuff. So do get on board with that. Also, there's courses in there. And don't forget to go and check out allincrypto.com. So that's all I've got for you in this video, guys. If you enjoyed the content, like, appreciate it. So as a comment. And on that note, I'm going to love and leave you. Thanks a lot for watching. See you in the next one.